Good morning, this is Daybreak on Bloomberg Quint Live. I'm Alex Matthew. There's lots to tell you about today. First, let me take you through the headlines. Asian markets open lower as the global sell-off continues. Crude prices fall the most in a month after the International Energy Agency cuts its demand forecast and US inventories unexpectedly rise. India's trade deficit rises to its highest level in nearly 3 years in October as exports drop for the first time in 15 months. And Tata Steel, Piramal Group and Edelweiss ARC are in the race to acquire Electro Steel Steels. That's a Bloomberg Quint exclusive. Let's turn now to the international markets, and US stocks slipped amid signs of a commodities glut and uncertain prospects for American tax cuts. The dollar lost the most since September. The S&P 500 and Nasdaq declined nearly 0.2%, with energy stocks leading the declines. The Dow fell about 0.13%. In a significant deviation from estimates, the American Petroleum Institute reported a buildup of 6.5 million barrels of United States crude oil reserves. Most analysts had expected the inventories to fall. In addition, the International Energy Agency cut its demand forecast, and that led to a sharp fall in crude prices. Turning to the Asian markets now, the Asian markets have opened weaker, taking cues from the US markets. The Japanese Nikkei, which was down nearly 1% in early trade, has regained some ground. By the way, Japan reported that its provisional GDP growth in the third quarter was 1.4%. That's more or less in line with what most analysts were penciling in. But let's turn to India now, and Darshan Mehta and Agam Vakil join me now to help set you up for the day's action. Morning, guys. Morning, guys. Darshan, first to you. Lots to talk about today. Earnings season over.
Yeah, earnings season is over, so we are quite relieved. But, it's a big commodity sell-off that's happened. And equities also seem to be not doing well. So if just take a look at the SGX Nifty, and that will give you an indication at par with what's happening with the global markets, with the Asian markets. So down 36 points, we are below the 10,200 mark. So the Nifty has been under constant pressure over the past few days. So that's the broad cues that we're getting in on the Nifty. As far as ADR is concerned, it seems that, metals again are seeing a lot of sell-off. So Vedanta ADR ended down almost 4%, and money seems to be flowing back into IT because Wipro and ADR ended up almost 1.6% and 0.7% higher. So that seems to be the cue that we're getting. Again, it seems that, money seems to be moving back into defensives. Crude, big sell-off that happened, trades lower by 1% in morning session. Yesterday also it was down almost 2%. So in the past 2 days, crude has been actually down by almost 3%. WTI closes in on 55 level, it's moving down, while Brent is nearing the $62 barrel per mark. So there is significant amount of sell-off, and signs of US stockpile increasing is something that is impacting crude. Big sell-off as far as commodities are concerned. Weak closing by the base metals on LME. Just take a look at some of them. Nickel was down almost 6%. Lead was down almost 2%. The other base metals, aluminium, copper, zinc, anywhere between 1 to 2%. So overall, extremely weak set of numbers. Even the COMEX copper is trading weak currently. Now, Shanghai has opened. Very weak cues coming in from Shanghai, especially rubber. Rubber is down almost 5% in trade. Steel is down 2.5%. Copper is down 2%. Aluminium is down 1%. So overall, extremely weak set of cues that are coming in as far as the entire commodity basket is concerned. Gold has surged for the third straight session. There seems to be money is moving back into safe assets. So gold seems to be surviving at this point of time. As far as flows were concerned, FIs were net buyers to the tune of 2,500 crores. Obviously, the big Bharti block deal that happened, that was there. DIs were net sellers to the tune of just 1 crore. This is on net basis. FIs have bought in 9,600 crores in the cash market on a month-to-date basis, while DIs have bought in almost 1,500 crores. What we're seeing as far as the market is concerned, the VIX again is moving higher. The Nifty closes below the 10,200 mark. That was where weakness was. Nifty Pharma saw a lot of selling. It was down almost 0.6%. And infrastructure as a pack saw significant amount of selling that came in. So most of the stocks managed to fall in trade. The Nifty was down almost 38 points. What contributed? After a long time, Reliance seems to be on the positive side. Axis Bank did well. M&M for the past few days is doing well. L&T, HDFC Bank, TCS and ITC were the big contributors on the downside for the Nifty. But Agam, what's the FNO situation like?
Well, we lost out on 10,200 as far as the Nifty is concerned. So perhaps some problems, at least in terms of some guys who are keeping an eye on the longs. But unwinding scene, and longs and winds as far as the Nifty is concerned. In terms of Bank Nifty too, when we consider the index itself, it's given us marginal movements, marginal losses, but unwinding seen there as well, so 2% cut as far as OI is concerned. But with that, when it comes to the India Volatility Index, we have seen it move back above the mark of 14. So some concerns there when it comes to the bulls, at least in the near term. And with that, the put call ratio also falls further down to 1.18. And in terms of changes in open interest, well, we have, as one might expect, further unwinding seen 10,300 puts and more writing in the 10,300 call, considering we have now firmly moved below that level. But in terms of stocks, well, we have a new entrant in the band, so a Kaveri Seed Company will be in focus, perhaps restricted trade as well. On the other hand, Jet Airways moves out of the band. And we're also keeping an eye on Repco Home Finance, which has seen a very strong day of trade yesterday, up 6.5%, open interest addition of nearly 25%. So we'll have to wait and watch whether or not we do see that strength continue in today's day of trade as well, Alex.
Absolutely. Thanks so much for that, Agam. But let's move on now. The bank recap announcement from the government has led to some hope that the health of the banking sector in India will improve. That's the word coming in from CLSA's Chris Wood. Speaking to Bloomberg Quint's Neeraj Shah, Wood also said that the investment cycle is likely to pick up in 3 years. Listen in.
Let's assume it's ceteris paribus, Chris. We don't hear too many disruptions. What about India individually? We perched well and truly above the Mount 10,000. Valuations a bit stretched. Earnings in Q2 not as bad as Q1. Do you think the numbers start showing themselves in the second half and will justify the kind of valuations that we are at currently? Is it possible to be able to predict and forecast that?
Yeah, well, I'm still comfortable sitting with I've got a structural 3 times overweight in India in my relative return Asia ex-Japan portfolio. I'm still comfortable with that. I did reduce that overweight a bit actually at the start of this quarter, precisely because the valuations were high. However, I restored it back to a triple overweight when we had the announcement of the bank recap. In my view, that was the missing link in the Indian equity story. I think there's been a huge number of positive reforms introduced by the Modi administration since the BJP government took power. But there's been one big missing link, one failure amid all the many successful reforms they've introduced, and that's been the almost total failure to address the problem in the banking system, which actually was inherited by this government. So in my view, that is the chief reason why the investment cycle has continued to trend down and why bank loan growth has been running recently below nominal GDP growth. But obviously, we've now had the announcement of the bank recap. So assuming that is implemented, that I believe creates light at the end of the tunnel.
Let's head now to Saloni Dhanuka, who has a check on the currency and the bond markets. Saloni, what do you have for us?
So Alex, the rupee yesterday retreated from its 6-week low and ended flat at 65.42 levels against the dollar. Now the home currency had lost close to 48 paise in the last 2 trading sessions on the back of strong dollar demand. Also sustained unwinding by foreign investors along with rising crude oil prices largely pressurized the rupee. Now on the global front, the euro trades close to 2.5 weeks high in the early Asian trade today near 1.18 levels against the dollar, on the back of better than expected German GDP data. Now the strength in euro pushed the dollar lower at 93.90 levels, which is well below its overnight highs of 94.50 levels. Now investors await key US consumer price inflation data, which is scheduled to release today evening. Now coming back home, dollar rupee is trading flat in the non-deliverable forward market. Moving on to bond market, the 10-year bond yield closed over 7% for the first time in nearly 14 months. On the back of increased inflation, which is thereby reducing expectation of a rate cut by RBI in the near time soon. And lastly, global funds increased their rupee debt holdings for the first time after selling consecutively for the 6 trading sessions. They infused close to 860 crores according to NSDL data, Alex.
Right. Thanks, Saloni, for that. To some macro data now, India's trade deficit widened to $14 billion in October from $8.9 billion in the previous month. The deficit is the highest since November 2014. Merchandise exports for October fell 1.12% from a year ago to $23.1 billion. This is the first time that exports have fallen in 15 months. Imports in October have risen by 7.6% to $37.1 billion. Upasana Bharadwaj of Kotak Mahindra Bank expects that the government will find it difficult to maintain its current account deficit below the 2% mark. Here's what she had to say.
The way the oil prices are going higher and higher, and the fact that there has been front loading of exports, and now we will see normalization on the exports front as well. So I think all in all, we are definitely looking at, the current account deficit closer to 2% of GDP by end of the year. And that is clearly, as long as we can contain a 2% deficit in the presence of benign capital flows, it should not be too much of a worry. But of course, we will have to be really, really watchful as to how, we can sustain a current account deficit below 2%, which looks very difficult at this point in time, especially with crude prices surging, to high levels.
Over to the commodities market now, and that's going to be the focus, I'm sure, in today's talking points. Jayesh Kilani joins us now with a sum up of everything that's happening in the commodity space. Jayesh, no guesses for what's going to be at the top of your list?
Yes, Alex. So I'm going to start off with oil prices. In fact, any commodity that you pick up except for precious metals is not doing that well. So let me start off with oil prices, which have seen a 1% cut after a 1.5% cut overnight as well. So, a sharp correction seen in oil prices. Now, this is backed by a surprise inventory buildup that we are seeing in the US. So, API is likely to report a 6.5 million barrel inventory buildup for US during the last week. Not so much, good news coming in for oil prices. Moving on to the base metal space, that also the entire base metal index, in fact, declined 2% overnight and closed at the lowest level in over a month. Now, this was backed by reports showing that China's economic expansion has slowed down in the month of October. So nickel fell as much as 5.5%, the most that it has fallen since March 2016. And you pick up any other industrial metal, that was down about 1 to 2% each. In fact, we are seeing similar cues come about for them in the Shanghai Futures Exchange, where even rubber prices have declined to a 2-week low and are trading down about 5.5%. Gold prices, however, have seen some stability as we've been tracking them for you around the 1280 mark. But staying with oil prices, let's listen in to Faith Birol of the International Energy Agency, who sees that the United States of America will likely to be the biggest oil producer going into the next decade.
Let's say in the next 10 years or so, U.S. total oil production will reach about 17 million barrels per day, and as such, there will be a big difference between the United States and the second biggest producer. And what we also see is that in the next 10 years, more than 80% of the global oil production growth comes from the United States only. As such, we believe there will be a lot of oil in the markets, and will put downward pressure on the prices. And in terms of natural gas, it is the same story, a similar story. The gas production, shale production in the United States will increase substantially. And again, in 10 years of time, the difference between US and Russia will be more than 30%. US will produce more than 30% gas than Russia, and lots of LNG exports will come to markets and redefine the global gas markets operations and the prices as well. So a big upheaval in the oil and gas markets driven by the shale boom in the United States.
Now, the race for stressed assets is getting hotter. At least 3 companies are in the race for debt-laden electro-steel steels. Who are the bidders, and by when can we see a sale? Vishwanath Nair filed this exclusive report.
Electro Steel Steels, the Kolkata-based stress steelmaker, has found interest from 3 potential bidders: Edelweiss ARC, Piramal Group, as well as Tata Steel, who will be submitting their final resolution plans in this matter within the next 4 to 6 weeks. Now, Electro Steel Steels was one of the 12 large corporate accounts which the Reserve Bank of India had flagged off to bankers and had asked them to take to the NCLT for immediate action under the Insolvency and Bankruptcy Code. The total exposure for the financial creditors in Electro Steel Steel stands at close to 13,000 crore, which is a large asset, and the bankers will be looking at ways to try and restructure these assets and probably sell this company to a potential bidder who will then turn around the company and be able to pay back the lenders. Now, the bankers have been trying to sell these 12 large corporate accounts to potential bidders, and they have had a bit of success in terms of expression of interest coming in number of these cases from not only domestic but also international players. SR Steel and JP Infratech are the cases in point. Now, Electro Steel Steels as a case in its history has had 2 attempts of debt restructuring, and both have failed because the bankers were either not able to restructure the debt properly or not find potential buyers who would maybe take over the company and turn it around at a reasonable price. Through the insolvency and bankruptcy process, that is what the bankers will be looking for: a reasonable price at which they can take a haircut and therefore sell the asset to potential bidder.
Now, the country's largest drug maker, Sun Pharma, reported its September quarter earnings post-market hours. Now, it had lower other income denting its top line. Darshan Mehta is still with us. Darshan, could you tell us a little more about that?
So basically, Sun Pharma came out with numbers which were in line. The top line was below what we had said because the other operating income part was much lower this time around. The margins came in line with what we were anticipating. So EBITDA came in at 1375 crore. We were also anticipating 1375 crore. And the PAT number is much higher because of 2 facts. First of all, the other income was much higher, 225 crores versus 119 crores. And the tax rate is much lower, 10% versus 15% last time around. Overall, it's come in line with what was anticipated even geographically. US sales were down 44%. India sales was up almost 11%. R&D cost at 7.7% of the cost. So basically, it's pretty much in line. What was important was the management commentary that came in. First of all, they're saying that they are seeing significant amount of challenges in the US pricing environment currently. Delay from the Halol plant is impacting a lot of its US sales, and they expect second half to gradually improve for them going ahead. As far as what was concerned with Halol, what they're saying is that there's no new update to share. They are expecting re-inspection to come in, and till that time they don't see any kind of approval. On their guidance, what they have said is that they have retained their FY18 guidance, but at the same time they have highlighted the concerns that are there in the US market. So 20 to 22% EBITDA margin with a single-digit revenue decline is the margin that is the guidance that they have maintained.
Thanks for that, Darshan. Now, GAIL reported an operationally strong quarter this time around, with marginally lower tax expenses boosting the profit numbers in September. Let's head across to Somit Sarkar for the details. Somit?
So the second quarter was operationally strong for GAIL on the back of higher volumes. Now, revenue rose around 9% to 12,410 crore rupees, while net profit was higher by 28% to 1,300 crore rupees. EBITDA also rose by around 9% to 2,070 crore rupees, while margins remained flat compared to last quarter to 16.7%. Now, LPG sales volume rose by 9%, but the segment overall remained weak due to lower realizations. EBIT margins of the LPG segment contracted by around 580 basis points. Now, EBIT margins of transmission and petchem segment expanded by around 760 and 310 basis points in the second quarter. Now, because of higher volumes, petchem volumes were up by around 34%, and natural gas transmission volumes were up by around 6% in the second quarter. Gas trading segment was also boosted because of higher volumes. The volumes were up by around 8% for gas marketing segment. In the second quarter, higher other income and marginally lower tax expense also boosted the net profit.
Thanks for that, Somit. On to the stock of the day. MOIL reported a stellar September quarter. Net profit jumped more than 120%. Nikki Mirchandani is tracking the counter closely, joins with all the details. Nikki?
Alex, extremely good set of numbers as you've pointed out. Revenue has grown at 46.4% at rupees 287 crore as compared to a base figure of 196 crore, which is also pretty much in line with what we were working with. Net profit has gone up by 123% at 92.7 crore as compared to a base quarter figure of 41.5 crore. EBITDA has risen by 547% at 116 crore as compared to a minuscule figure of nearly 18 odd crore in the base quarter. Margins have expanded to 40% as compared to 9%. Now, what goes behind the making of these numbers? On the top line front, we have the high yielding mining products, which have registered a sharp uptick growth on year basis, which have led to the overall revenue growth. Mining products revenue has nearly grown out by two-folds to 279 crore, and higher revenue combined with your operational efficiencies have trickled down well in the bottom line performance. Inventory expenses, they have come down drastically, down by 81% year on year to 633 crore in this quarter. Now, operating efficiency and higher revenue, as I just mentioned, led to bottom line performance. If you look at the segment wise bifurcation for the revenue, you would see that mining contributes to nearly 95% of your overall revenue, while manufacturers products contributes to 3 odd percent, and the remaining is being contributed by power. If you look at the EBITDA performance, there also mining product is a high yielding product, so obviously a sharp uptick in the revenue for high yielding product has really gone down well for the company. Manufacturers product is 0.63 in terms of EBITDA margin. Power contribution, even as a contribution to the overall revenue, is less, but as a contribution to your EBITDA is more at 3.21%. To give you a little background about this company, it is a manganese ore producer company that I'm talking about, and has a market capitalization of close to 6,600 odd crore, and the stock has run up quite a bit, like 60% in the last 6 months on prospects of huge demand coming in for electric vehicles battery segment. Alex.
Right, we leave it at that. Thanks for that, Nikki. Now, Shraddha Babla joins in with all the stocks that you have to watch for in trade today. Shraddha, the stocks in news, what are they?
Well, Alex, morning. To start off with Indiabulls Housing Finance, where the company has said that they have sold 10% of their stake in UK-based Oak North Bank to GIC, which is a big investor. They have done that for a value of 770 crores. So totally, they had invested about 663 crores 2 years back for a 40% stake. So they've said that 40% stake has now come down to 30% with another second round of funding coming in October. So this also brings down the company's stake. So after selling this 10% stake, they have another 20% remaining, and they've said that the 20% investment in the bank is worth 1,500 crores at the current valuation. So post this 10% stake also, Indiabulls Housing Finance will continue to remain the largest single shareholder in the bank, and they have 2 nominees on the board. Remember, when we spoke to them after their earnings, they did tell BQ that they're looking for an IPO for Oak North Bank. So interesting to see what they have to say with respect to this stake sale. You also have HCL Technologies, which has won a 5-year IT infrastructure services contract, and this is from the Jordan Lloyd Thompson Group. L&T Infotech, yet another IT company in focus. They have said they are going to be acquiring Syncordis along with its subsidiaries in France, UK, Luxembourg and India. Now, this acquisition is for a total of 15 million euros, which is payable in cash. There will also be an additional consideration of 13.5 million euros, which will be payable over the next 4 to 5 years, and that will be dependent on the performance targets. Now, this acquisition will enhance L&T Infotech's footprint in the European financial services market, and they've said that the acquisition is expected to be completed in about 6 to 8 weeks. And lastly, we also have Laurus Labs, where the company has received the establishment inspection report from the US FDA, which means they've got a clearance for their facility. This is for its Visakhapatnam units 1 and 3. This is for the inspection that was conducted in August 2017. So again, good news. We should see some marginal positive reaction on that name. So all of these stocks to watch out for, Alex.
Thanks, Shraddha. Now, Somit's back with the big brokerage calls of the day. Somit?
So on brokerage today, we have is Antique on Sun TV. Now they have initiated coverage on the stock with a buy rating and a target price of 1070, which suggests a potential upside of 25%. Now Sun is expected to outperform on the back of recovery in ad revenue, strong domestic subscription revenue, and turnaround of its loss-making IPL business. Now the brokerage is expecting recovery in ad revenue to start from the second half of financial year 2018 on the back of company's renewed focus on market share. Now they're expecting the ad revenue to grow at a compounded annual growth rate of 10% over FY17 to FY20. They're expecting subscription revenue, domestic subscription revenue, to grow at a CAGR of 20% over FY17 to FY20 on commencement of digitization in Tamil Nadu. Now, the IPL business, which has been loss-making for the company, is expected to turn around, which will also help the company's margin. Now, the EBIT margin of the company is expected to improve by 200 basis points from FY19 on the back of this turnaround in the IPL business. Lastly, they are expecting the net profit to grow at a compounded annual growth rate of 18% over FY17 to FY20, and on the back of this, they are expecting the stock to re-rate from current levels.
Thanks for that, Somit. Now, there's a lot to talk about today, clearly, over the course of the day. Earnings season ends, and a bit later, we'll have a special report on the earnings performance of the Nifty 50. So watch out for that. There are also a few stories that you should consider reading on the website, bloombergquint.com. First up, Indians got wealthier faster than most of their peers. In the year to June, Indians added $451 billion to their total wealth during the period. That's a yearly rise of 9.9%, second only to the 10.1% growth seen in the US. There's a lot of discrepancy there, though. That's according to Credit Suisse's Research Institute and the 2017 Global Wealth Report. As many as 141 initial proposals for air services, including operating aircraft and helicopters, on 502 routes have been received under the second round of Regional Air Connectivity Scheme. Civil Aviation Minister Ashok Gajapati Raju has said that the second round of bidding saw a good response and that 17 players have come up with initial proposals. There's more agricultural land in the world than previously thought, surprising, and India, rather than the US or China, is now believed to have the biggest acreage of any country, according to a new study that's aimed at improving food and water security. Well, that's all we have for you in this edition of Daybreak, but all you need to know is up next. Do stay tuned. This is Bloomberg Quint.